Happy Friday, everyone. We know the drill. It's Excel Friday, so we're going to start out with Excel. I did want to make a quick announcement, or I thought I had two announcements. The problem with getting old is that if I don't write things down, I don't get to talk about them. And it becomes more and more acute the older and older I get, which is really problematic. But the one thing I was going to talk about is we do have groups assigned for the group projects, and I'll post that to Blackboard. I've actually put Blackboard in Brightspace so that everybody knows in their groups. I think most everybody should already know because the reason we have the groups is 4 of the groups were self-selected. So basically everybody's in this group was just everybody who did not send me an email. But I'll get that updated. You might start reaching out to your fellow group members and start talking about topics now. This is a little bit earlier than I usually think about it. My other 2 classes do not have any other groups assigned yet. That just tells you where we're at and just the sheer context of things. But something to think about. There are actually a lot of interesting topics. Like I mentioned at the beginning of the semester, a lot of the groups tend to tend to select around cybersecurity and artificial intelligence, and I expect that to be the case. If you really want to do SOC reporting, I mean, that's your group's choice. You know, I think it's a very valuable topic. It's just not one of those ones that most groups are just enthusiastic to do. So start thinking about that. Some things that you can present on in this semester, and it is first come, first serve. So. One thing about cybersecurity and artificial intelligence I will mention is they're too broad to do by themselves. So I would select like an area of that. So if you're going to do cybersecurity, then you might think about ransomware or malware or something along those lines. If you wanted to do AI, you want to think about machine learning, something along those lines. There's some examples given in the syllabus that you can think about. All right, with that, let's talk about Excel today. So I've mentioned this already, and you're going to hear me say this a lot. Again, I tend to repeat myself, but sometimes it's intentional, sometimes it's not. This is one of those things that it's intentional. One of the big things from employers for Truman State students, one of the big things they're looking for is good Excel skills. This is something we hear all the time. It's actually number 1 on the list. It's like making sure that we have good Excel skills. And it doesn't really matter what area that you're going into. Most everybody in this room will be using Excel at some point in the future. That being said, you probably have ambitions to work just beyond working in Excel. I mean, some people are just like perfectly happy saying, I like spreadsheets, Dr. Barnes. I'm okay with Excel. And if that's your case, if you want to do Excel the rest of your life, more power to you. But Excel is kind of what I would say it is a jack of all trades tool. It can do everything. Not necessarily as well as other programs, but it can do some things, it can do basically everything at a reasonable level. And that's one of the big advantages of Excel is its versatility. As you start working, you start developing towards your career, you're going to start identifying areas that you want to focus on. Some of you may say, I really enjoy data analysis. Some of you may be more interested about like visualization and reporting information. There's a lot of tools that are out there that are more specialized tools that will benefit you. But I will say, as personal experience, my personal experience is good Excel skills will get you a long ways towards that. Now, we'll have some opportunity to look at some other programs. We've had some exposure in NetSuite. We're going to do a little bit of Power BI a little bit later in the semester. I say very little because I don't consider myself even remotely an expert in Power BI, but I do think it's interesting to look at visualization tools. That being said, we do want to kind of explore how the Excel sets the foundation for some of the other concepts that we're going to be talking about. Data analysis is one of those big areas, but today we're going to talk a little bit about visualization. And Excel is not an amazing visualization tool. The interesting thing was if you go back 15 years, it was the visualization tool because no other visualization tool really existed. Nowadays we have, and by the way, when I say visualization, that is just a way of presenting aggregate data in a way that's visually appealing. So I know that everybody in this room has the ability to put together information and can analyze information, and that's great. But presenting it in a context, presenting it in a room to people who are listening to you, that's a much different skill set than being able to look at massive amounts of information. One of my stories that I tell to kind of illustrate this is I taught 221 for a very long time. I think I taught 221 for the first 7 years of my time here at Truman, and I'd only took up our AIS recently. But I think most everybody in this room probably took, when they took 221, you had to do a financial analysis of a company. And some of you may have done a presentation, some of you may not. You've probably done financial analysis presentations in at least one of your courses, if not multiple courses. And one thing that I told my students is that when you present the information, it needs to be detailed enough to provide a good insight, but it also needs to be summarized so that you're not overwhelming the audience. And some students did a really good job of that. They selected specific pieces of information and said, here's the interesting things we found. And then some students would put together these massive financial statements, these massive balance sheets in detail, and that's what went on their slides. And I was like, well, I appreciate the work that you put into this, but I can't digest the level of information that you're putting up there. I can't digest an entire slide of detail. I want you to summarize this in more succinct terms for me. And that's true for Excel, is that you're going to have some data sets that are going to be just absolutely massive, much bigger than these 6 observation data sets. And you're going to have people who are going to ask you, I want you to summarize this for me in a way that's meaningful. And the good news is that you already have some tools for this. In fact, I'm going to say that probably you've done all of the tools we're going to do today. Maybe you've not done the last one, but we'll explore that. But this is, again, the starting point for how you actually present information. And this is going to be a skill that you need to have. This is going to be a skill that you will rely upon, regardless of what area you're going into. If you decide you want to go into business yourself, you're like, Dr. Barnes, I plan on going into big business. I'm going to open my own business. You may have to apply for loans, and the bank is going to say, send us information. If you send them a whole bunch of receipts and a whole bunch of documents saying, here's my cash flows, they're going to say, all right, this is too much. Shorten it down for me, simplify this. So simplifying this and making it more succinct and less detailed, this is going to be something that's very important. Now we're going to be doing some very basic stuff, and we're going to be expanding upon that as we move forward through this. So as you can see, I've got some instructor ratings, and I didn't update these. I apologize. I should have updated these for 2024, but this is obviously a file I created last semester. So if you want to put that my evaluations, did not update file. That's fair. Okay, I will accept that. All right. Let's look at kind of some information with respect to what these evaluations look like. And there's only 6 observations. We're looking at evaluations for the month of August. So we've got the instructors, and as we're going to find out, the instructors, this is more robust when you look at ratings that are over a longer period. But as you can see here, Dr. Barnes sitting very solidly in this 4-point rating. This is out of 10, by the way. 4-point out of 10. That's kind of where my average sits at. And all the others doing really, really well. Dr. Caden sitting there at a 9. Dr. Otero. Dr. Deers, I know that seems like I'm being cruel to Dr. Deers, but she's an unknown quantity. She's only been here for a year. A lot of students are not familiar with her yet. She's a wonderful human being, and students start enjoying the work, and you'll see what happens as we move forward. But let's just do a very basic visualization of this. We're going to do a very, very basic presentation of data. And there's a lot of ways we can approach this, but I just want to start out with the basic one so we can move from there. So let's just go ahead and let's insert, and there's a bunch of charts we're here. Let's just do a bar graph. Just a column or bar chart. And by the way, I probably should say, let's go ahead and highlight our data that we want to create, because that's going to be important. You could actually select it after the fact, but that's just an extra step. So we're going to select the instructor and rating, and that's it. And we're just going to put that in a bar chart. Just 2D column, something very simple and straightforward. And that literally required a drag and select data and clicking on a button, and that's all there was to it. The funny part about this is, and you'll hear me say this a lot, if you deal with anybody who doesn't know how to use Excel, this is going to seem really cool to them. They're going to say, wow, that's really, really sweet. How did you do that? It's like I clicked twice on a spreadsheet. That was all there was to it. Yeah, when you do some of these simple tasks, I know it seems simple because you've had some exposure to it, but this is very, very relevant, very profound. And this actually presents information in a much more digestible form than just this table. And I know that we're only dealing with 6 ratings. We're going to go beyond that here in just a second. But imagine if you're dealing with like a class of 31 students, because I've got 31 students in this classroom. Having a table like this actually allows me to see trends, because I can organize and sort this according to ratings, and I can see what was the performance like. So say, for example, I look at exam 1 and I want to see what was the average on that. How did the distribution look like? This is something that became very relevant to me back when I was teaching online courses. That was a very early part of my career here at Truman. I had something called a bimodal distribution. Has anybody ever heard of bimodal distribution? It's the bane of my existence, by the way. Bimodal distribution is the bane of my existence. So bimodal basically means that you've got a whole bunch of people at the top and a whole bunch of people at the bottom, which that's something that you really have trouble, because you know that you're getting across to some people and you're not getting across to other people. And the reason for the online classroom environment, why it did that, is that when you're in an online environment, a lot of students were just like, I'm not going to read the book. I'm not even bother with the homework. And then they show up for the exam and they think they know everything and they get 12 out of 100. And so this happened all the time for those courses, which is one of those. This is 220 and 221 that I was teaching back then, and so had a lot of students that were not taking it seriously. Now everybody's kind of reached this point in their career; they're taking it far more seriously, and it's a lot easier to do it in a classroom environment. That being said, when I have a bimodal distribution in any of my classes, you will see me just be very, very grumpy, very, very grumpy, because that just basically means that I think that I'm doing the job that I should be doing, but for some reason it's just not sticking. But that's what this allows me to suss out, is to actually see what the distribution looks like, and it's a very, very simple, but very, very straightforward and powerful tool. Now, that being said, we can't just leave it there, because usually whenever we have instructor ratings, we have instructor ratings for the entire semester. So you notice here on the next tab, I've got the 2023 instructor ratings. And this is a lot more challenging to digest. It's only 24 lines of information. Has 6 instructors for 4 months. Pretty limited amount of information. And even looking at this, it's very hard to determine any trends based on the details. So what I'd like to do is I'd like to take this information and aggregate it in a way that's meaningful. And there are a few ways that we can go about that. So let's just go ahead and we're going to go ahead and do a couple of these. So let's just highlight all of the data here. So A1 through C25. And we're going to insert a pivot table. Now, I invited Dr. Caden to come down and actually be a participant in this because she loves pivot tables. I'm not even exaggerating. She thinks pivot tables are the end-all be-all of Excel. I think pivot tables are fine. I'm not a particular big fan of them, but I do recognize their importance. I legitimately think that if there's a conversation with her family and she says, where are we going to go out to eat? She sets up Excel and does a pivot table of all the options and evaluates those. And you can tell her I said that because I think it's factually correct, okay? So this is a pivot table in honor of Dr. Caden. So we're just going to click on the pivot table. You don't need to click the drop down. We're just going to open it. And let's actually just put it in the existing worksheet. I'm just going to click on starting D1 here so we can have it side by side. And yeah, that's all we're going to do. We already got a data set. We've got the existing worksheet, so let's click on it. But we do have to create the pivot table. So that's, first of all, what we need to do. We've actually got it set up so we can create it, but we need to know what goes where. So just going to do a very basic one. Let's go ahead. Let's drag months down to columns, drag instructors down to rows, and we're going to round ratings to values. And there we have it. This is a very, very straightforward value. Now, the sum of the ratings doesn't really mean anything. So let's just go ahead and let's change the value to average. Value field settings. Yeah, we're going to change the value field settings to average. I apologize. I went through that and didn't really tell you how to do it. So you click on the down arrow. The last option is value field settings, and it's currently on sum. We're going to change it to average. I apologize for going through this so quickly. And there's a reason we do that, but we'll see what's happening in that case. All right. So this is much, much better presentation than what we had before. And it gives us some versatility. It gives us some ability to actually sort information out. So it is sorted by first name alphabetically, which we can fix that if we wanted to, but it's not really a big issue. And you can kind of see some interesting trends here. Dr. Eisen, very consistent. Dr. Otero, she gets better as the semester goes along. Dr. Deers started out low, but the students apparently said, you know what, Dr. Deers is pretty awesome, so we get better. Dr. Barnes sitting pretty solidly at that 3.5 rating, that's enough to keep my job, so that's all that really matters, all right. And then Dr. Caden. Dr. Caden, yeah, you can kind of see what's happening with Dr. Caden there. Starts out really, really strong, then students take their first exam, and then all of a sudden it's like, oh, what's happening here? What's happening? I am also obviously just kidding. Dr. Caden is one of the most wonderful human beings I've ever met, but I have to give her grief because she's the tax professor. And auditors and tax professors are mortal enemies, okay? Auditors and tax people, mortal enemies, all right? So even though I have high regard for Dr. Caden as a person, she just definitely chose the wrong path, all right? Definitely the wrong direction. So yeah, you kind of see the averages there. We can even mess around with this if we really wanted to, if we wanted to go into a little bit more detail. So if I wanted to go ahead and sort this out, then let's see what we want to do. Try to think of what some other options I could set up here, but there's not really anything I want to go into. I think I had this planned out much better, but I don't. My apologies. Let's just go ahead and say we're going to be good with that. So, yeah, this is good. This is fine. I think that if you set up a pivot table and have this information, that you can present meaningful data. That being said, it's not very visually appealing. Okay, it's still just numeric presentation. So what I'd like to do is we're going to take we're going to try to get the best of all possible worlds. We're going to take what we've learned from this, and we're going to actually try to do the same thing. So we don't have to delete the pivot table. Let's just go ahead and right click. And let's just go ahead and copy this tab. So basically, if you've never created a copy before, we're just going to click on right click and select copy. It says move or copy. If you select create copy, it'll create a copy. And we're just going to move this. Uh-oh. There we go. Move to end. So now we've got two tabs of the same thing. And the only reason I did this is I want to delete this pivot table. I'm just going to highlight B through I. And you can't just hit delete because it will just delete the data in here. So we need to actually right click and delete those columns. Deleting pivot tables since 2024. Actually, I've been deleting pivot tables a long time before that. All right, so let's go ahead and do our final tool. This is the final thing we're going to look at. Like I said, we've got a chart here that we've created, very simple chart. We've got a pivot table. Let's go ahead and create a pivot chart, which we do the same thing we started out with pivot tables. But instead of selecting pivot tables, we're actually going to go all the way over here to pivot chart and create that. And we're going to do the same thing before. We already got the range selected. We're going to put it in the existing worksheet starting at D1. That's all you need to do this. All you need to do is just select D1. If you want to put it in another worksheet, it's fine. There's no real need to. And now we've got a chart that we're creating, but pivot charts are based on information from the pivot table. So we still have to set it up the same way we actually had before. So let's go ahead and go down to month, structure, and rating. So exactly the same field setup that we had before. So month is in the legend, which is the series. Instructor is an axis. And then value is going to be sum of the rating. Let's go ahead and change that like we did before. Change the value field settings to average. I don't think it will change anything, but maybe I don't think it'll change anything. So we're presenting aggregate data. This is kind of neat. We actually have multiple range of data. I don't want to do that. Let's try this. Okay. We have multiple ranges of the data. I'm going to move this over so we can see the ugly pivot table. I know Dr. Caden's really going to be upset. What's up? Sure. Okay. So I'm going to back up and I'll show you where everything comes from. I apologize. I did go through a lot of this stuff really quickly. So we highlight the data. We're going to go to insert, and moving over here, we're going to click on pivot chart. Once we've done that, it's already selected the data for us, so we don't need to do that. We're just going to click on existing worksheet. And we'll start at the same place we started the pivot table. That's actually where the pivot table originally go. The chart itself will find its own range. Click OK. And then we just need to set our parameters. We're just going to do the same parameters we did for the pivot table. We're dropping the month down into legend, structure down to axis, and rating down into values. And I changed it over to average. I don't think we need to worry about that because we're not really presenting the averages here. But if you want to change it, that's fine. So yeah, something that's nice and visually appealing that actually has the same characteristics of the pivot table. Now, if you presented this is kind of neat in the fact that it actually presents all that data in a meaningful way. It actually separates out the detail that we looked at in the pivot table, but it's far more visually appealing than the pivot table. What's really neat, what I like about the pivot charts is that they have some of the flexibility that you would see in true visualization tools. Has anybody worked in Power BI or Tableau before this? So if you have, probably note that you can actually manipulate the data in real time. You can actually change the parameters that you're looking at. And this shares some of those traits. So like if I wanted to look at the month here, I can look at all the months together. Or if I just wanted to look at one month, I can select just a single month. Like if I want to look at the month of November, I can filter that out. Same thing for the instructor. I can filter out a single instructor. I haven't talked about cool jazz music voice Dr. Shoniwa yet. Dr. Shoniwa was pretty consistent there. What if I want to compare the tax instructors? Let's go ahead and compare Dr. Caden and Dr. Deers. So look at them side by side. Well, that's an interesting dichotomy right there, isn't it? Not the way it works in the real world, that's fun. All right, we're gonna have the actual comparison. Mortal enemy comparison. Here we go. Dr. Barnes, Dr. Caden. Yeah, Dr. Caden still beats me in that regard. Yeah, still much better than I am. But yeah, again, very, very simple process, very meaningful though. This is a way that you can present information that's going to be digestible to the more average audience. When you're preparing for presentations, if you have to do a financial analysis, this is definitely the way to go. Not necessarily Excel, but just visualization in general. And like I said, we'll actually look at more meaningful visualization tools when we get to Power BI, do some work in there. If you've already got experience in there, that's great. That means that you're going to have tools that are going to be beneficial. I mentioned earlier that my experience in Excel was very helpful to me as far as moving forward when I started with KPMG. Part of that is because I was able to translate those skills into data analysis. I worked very heavily in a data analysis program that they needed help with. You can translate these skills into other areas that will actually be meaningful for you for the future. So if you feel very solid and comfortable with this information, that's great. That means that you're meeting the demand that you're going to need in order to move on your career. If you're struggling in this area, I strongly recommend that you work and try to improve your Excel skills. Even if you don't feel comfortable in other technology programs, this will give you a lot more comfort for things that you will need for the future. All right, with that, let's move on to homework, shall we? All right. Got a slew of multiple choice questions. I actually thought these multiple choice questions were pretty good for this particular assignment. Note, this is something I want to mention. I mentioned at the beginning of the semester, but I want to reiterate. Be very, very careful and be very conscientious whenever I'm doing different types of questions. I actually specified at the beginning of the homework assignment. I said, please note that I use discussion questions rather than problems. I have found that in previous classes that even though I specify which types of questions I'm looking at, students will get those questions wrong. It's certainly understandable because there's different categories of questions, but just be very cautious of that. There are upcoming assignments that I will be giving out that you will actually have both discussion questions and problems, which you often do. So just be aware of that, but make sure you know what you're working on whenever you do those problems. The multiple choice questions are pretty straightforward. So which of the following is not an activity within the sales and collection process? By the way, do you guys hate questions that are like, which one's not this thing? So that I personally have always disliked those types of questions, and I try to avoid them whenever possible. Sometimes it's not possible, but I try not to do those on the exams. That being said, there will be a few of those. So you have to read through the answers and see which ones are. Selling products and services. Would that actually be part of a revenue process? Selling goods and services? We're going to say, yeah, that's probably a part of the process. Billing customers. If we're in business to business environment, yes, we need to actually make sure they know what the bill is. Managing inventory. This one I'm a little bit dicey on because it's not a true revenue process. That being said, it is definitely adjacent to revenue process, and the book says this is one of those things. So if you answered C, I wouldn't fault you for that, but I think that there's enough argument to say it is part of the process. The recording payments for the customers, obviously, when they send payment in, we're going to have that. So E, all of the above. All of the above is the answer here for this one. Moving on to question 2. The sales and collection process is the point of contact between the firm and which set of external business partners? This should be an obvious question. Who do we sell to? We sell to customers. Now, there's going to be an offset for this when we go to the next section. We're going to do the purchasing process in the next section, which means that we're the customer and we're purchasing from vendors. It seems like such a silly thing for me to reiterate, but I do want to reiterate this point. Make sure you understand what process area you're in, because that will actually dictate who the external party is. We're in revenue process, we're dealing with customers, and we're in the purchasing process, we're dealing with vendors or suppliers. And it's really important to note because it does get confusing, as silly as that sounds, it can get confusing, particularly when we start talking about the entire supply chain. All right, question number 3. Which of the following sales and collection process activities, so revenue process, can result in the creation of accounts receivable, an account receivable? So what does an account receivable creation dictate? What does that mean? You all did this in 220. When do you create an account receivable? Is it just because whenever the teacher told you to do it? It's like, yeah, whenever Dr. Eisen or Dr. Deers or whoever you had for 220, anybody have Professor Amos? Yeah, okay. So whenever they told you to, and that's probably the correct answer, but it's not one of the options up here. So when do we create that receivable? So that's the point where we actually recognize revenue. Remember we talked about revenue recognition on Monday? I said we need to know exactly when this occurs. So if you're taking 302, those of you taking 302 right now, Dr. Ison's probably talked about something called a performance obligation. Has he talked about that yet? If he has not talked about that yet, he will. Or if he doesn't, then you need to come talk to me because he's not doing his job. All right. But that's a revenue recognition principle when they meet a particular requirement for revenue recognition. So where's their performance obligation? What is going to be happening? Well, obviously, that's when we perform our responsibility. So if you're talking about a revenue process, what is that going to be? It's when you've delivered the goods or services you promised to the customers. So shipping ordered products to the customer, that's going to be B as our answer. And again, it seems like such a small and little thing to note, but it actually tracks the entire process. It dictates when the journal entries begin in the system. So we need to make sure we note exactly when it takes place. All right, moving down to question number 8. Which of the following is an example of a business rule implementing access controls? Now, remember, in an information system, we generally have 2 types of controls. We have general or access controls, and then we have application controls. And we talked about this a little bit at the end of class on Monday. A lot of people were packing up at the end of class on Monday, so may have missed it, but let's go ahead and make sure we're on top of it, all right? I know I was running late, so that's my bad, not yours, all right? But when we talk about a general or access control, who is usually responsible for that control? Is it the employee or the system? The employee, okay, the employee. So that's what we're going to be dealing with. We're going to be dealing with some employee responsibility. If we're talking about an access control, is it we're talking about the employee of the system? Application control, not access, application control. Yeah, we're talking about the system. System is tracking information. So we're looking for something that's an employee responsibility right here. So what do you think? Warehouse containing inventory must be locked when the inventory manager is not present. Are the people who work in warehouse employees? Yes, so that sounds like an access control. Users recording collection. By the way, is anybody just offset by the fact that they used a apostrophe there? There shouldn't be apostrophe there. It shouldn't. That's not a possessive statement. Okay. So again, one of those typos that I'm going to harp on. But anyway, users, plural, not users. Users recording. Somebody who owns the recording. Users recording collections cannot modify sales records. Our users of the system are those employees. Yes, so this is another employee or an access control. The computer system generated audit control, or an audit, sorry, generated an audit trail. So that's the system doing that. So that's an application control. That's an application control. Internal auditors shall be used. Okay, so this one seems a little bit dicey because we say internal auditors are an employee of the organization, but this is not really a business rule. This is not really a control. This is somebody who's responsible for oversight of the control. So even though D sounds like it's good because these are employees, this is not really a business rule. So we got both A and B are business rules implementing access controls. That's our answer. All right, now we have some questions about the UML diagrams. You know, one of my favorite things to talk about. So we have this diagram here, which I'm going to leave up so we can talk about this. So refer to the association marked with 1 in the preceding diagram, which the following is best description of the association. So 1 is up here, and it doesn't specify which one we're referring to, but if you'll notice the answers, all of them say each employee. So let's just go ahead and make sure we dictate this. So each employer. So we start with employees here. Which multiplicity am I concerned with? This one or this one over here? The one on the left or the one on the right? The one on the left. Okay, I moved to the FAR association. So this here. So this is saying employees can be responsible for 0 sales, or they can have many sales. Is that what this we're dictating right here? So a minimum of 0 sales or a maximum of many sales. Can we agree that that's a multiplicity? I hope so, because if I get this wrong, I shouldn't be teaching this course. All right, so we're going to agree that that's the case. So if that's the case, what are our answers? Each employee participates in at least 1 sale. No, we said minimum of 0. Each employee participates in a minimum of 0 sales. Yes, B is our answer. Let's go with the rest. Each employee participates in a maximum of 1 sale. We know maximum is many. Each employee participates in at least 2 sales. Well, the first 2 were not correct, and that was not correct. Or A and C were not correct, that's not correct. And we do know E, by the fact that B is correct, E cannot be correct. All right, number 14. Refer to the association mark with the number 2, which of the following is best description of this association. So number 2, same process as before. We're looking at association between employees and cash receipts, right? So in this case, if you look at the answers all begin with cash receipts. So we're talking about the association moving this direction. So cash receipts, we say cash receipts has a 1-to-1 relationship relative to employees. Means cash receipt involves 1 employee and only 1 employee. Does that sound good? Okay, so if that's the case, then that's the answer. Each cash receipt is associated with only 1 employee. That C is our answer. Again, reading the diagram and then looking at which association we're trying to depict based on what our interpretation is. All right, Question number 3, I threw a curveball at you. Sorry, question number 17, I should say, for association number 3. Refer the association mark to the number 3 in the piece sheeting diagram. If the minimum multiplicity next to customers was 0 instead of 1, what does that mean? Okay, so again, we're looking at 3, and you will notice down here the association is 1-to-1, which basically says sales involve one customer and only one customer. That makes sense, right? Okay. This question is a little bit nuanced, and I love this question because I love questions that make you think. This is saying, what if we change the minimum multiplicity to 0? How would we interpret that? They're saying this is a valid interpretation. How would we interpret that if that's the case? So we're saying that in some sales transactions, we have no customer data listed there. Is it possible that you could have a sale with no customer data? I mean, you obviously can't have a sale without a customer, but again, this is a representation of the information in the system. So think about it this way. Could we have a sale with no customer data listed? Is that a possibility? Certainly. How could we explain that? It says some sales are made in cash and customer information is not recorded. If customer information is not recorded, does that mean it's not in the system? That's exactly what that means. So C is our answer. We're saying that there is a customer, but our system does not recognize that customer. So we could have a system acknowledgement where this is a relation of 0 and 1, because we could have 0 customer data points listed, or no customer information listed for some transactions. Does that make sense? Again, the interpretation of these type of questions are the things that I think you should focus on, because even though the associations themselves are difficult, understanding how these associations can change is going to give you a lot more detail, a lot more information. All right, I don't necessarily like 21. I think it's a little bit confusing, but we're looking at the association for number 5. So this association right here says, which of the following is best example of a business rule that constrains the association? Can't talk today. All right. I have a real problem with this question because 2 of the answers are basically the same. All right. So read A. A says sales are allowed if they include at least one inventory item. And then C says sales must include at least one inventory item. So is that, first of all, is that an accurate statement? Sales must include at least one inventory item? Yeah. So both of these statements are factually correct. The issue that the book gets into is they say which one's a business rule. I would make the argument that they're both business rules because they mean exactly the same thing. The book says C is the answer. So what I'm going to tell you is that if you answered A, you are correct. If you answered C, you're correct. You circle both and say, Dr. Barnes, why are you giving us these terrible questions? That is also a correct statement. Okay. I do think that this is a confusing question. I think the book makes the arguments that the word must is a stronger statement than are allowed. That being said, I will not ask you to split hairs like that on the exam. There'll be one answer and one answer only. All right, refer to the association with number 7 in the preceding diagram. Since the customers pay for all sales in full at the end of the month, which of the following is the multiplicity that should be found next to the cash receipts class? This is an interesting one. So we don't have the associations listed here, but it's saying that customers pay for sales in full at the end of the month. So what should our association down here be? Okay, so we're saying sales can have some number of cash receipts. So if they pay for in full, can we say that they have a minimum of 0 cash receipts? Could you have a sale that customers don't pay for yet? Sure, you could have we have that situation where customers do not pay for the cash receipts yet. Okay, so that's a possibility. So I shouldn't say yet; they don't pay for it all. I should say it's not because they pay for in full. So if they are going to pay, it's going to be at the end of the month. But do we have the possibility of customers not paying? Yeah, absolutely. You could actually have a sale and the customer says, got no money, sorry. All right, which is not something we're happy about, but that does exist. But if that's the case, sales are going to have possibility of minimum of 0 cash transactions or a maximum of 1 cash receipt because they pay for in full at the time at the end of the month. So this association is 0 to 1, saying could have a sale with no cash receipts because it could just not be paid, which is unfortunate, but of truth. Or we could have 1 because if they're going to pay for the cash receipts or they're going to pay for the sales, they're going to pay for all of them. So 1 cash receipt at the end of the month. Same, 26 refers to the same one, but it actually looks at this up here. It actually looks at the association. All right, so paid in full at the end of the month, which of the following should be found next to the sales class. Okay, so we're saying cash receipts are associated with how many sales. So if we've got a cash receipt, can we have a minimum of 0 sales? Is that a possibility? Do customers just say, you know, we didn't buy anything from you, but we're just going to give you some money anyway because we like your style? Is that likely in most businesses? Not really. Okay, so we have at least a minimum multiplicity of 1, meaning that a cash receipt has to be associated with at least 1 sale. Can customers pay for more than 1 sale on a single cash or cash payment? Could they say, you know what, we bought from you 5 times this month. Let me give you one check to pay for all 5 sales. Yes. So this could be a one or a mini. At least one cash receipt, or at least one sale for each cash receipt, but it can be as mini sales. There can be mini transaction sales there. All right. Assume the customers, the question 27 is the last of our multiple choice questions, I believe. Yeah, it's 27. So we're dealing with number 7 again. Assume the customers pay for all sales in the month and during full and in the month. Which of the following is the best example of a business rule that constrains this association? So this is an interesting one. So we're asking about a business rule because this is going to create our controls, but we need to define what the business rule is based on this association. So what's going on here? Why are customers paying for sales at the end of the month? What is the natural assumption here? Do Taco Bell customers, do they pay for all their purchases at the end of the month? That'd be great. You go to Taco Bell, says, I'm just going to put it on credit. That'd be great. It's like, give me a chalupa. I'll put it on credit. Yeah. Yeah. Of course, then if you don't pay, then they probably charge some exorbitant interest rate and they come after you because Taco Bell's collections are like that. No, obviously we can't do that. Taco Bell is a cash-based business. So we're assuming that in this situation, for this to occur, this is not a cash-based business. This is a credit-based business. Okay. So the answer A says customers are allowed to pay for sales on credit. Does that sound like a valid business rule given this association? Sure sounds like a good one to me. Customers are allowed to pay a credit. Remember, this is not a mandatory rule. This is an obligatory rules or whatever the statement is. I can't remember the association, but this is one of those business rules. Let's go to the rest. Customers must pay for sales at the time of sale. Well, if they're buying on credit, they by definition are not paying on at the time of the sale. So B cannot be our answer. Customers are prohibited from paying sales on credit. The whole reason we have cash receipts is because they're paying for things they purchase on credit. So C cannot be your answer. Customers may delay payment for a sale upon approval by a manager. This is an interesting one. Is it possible this could be a business rule? It is possible this could be a business rule, but what would need to exist in order for this to be a business rule? There would have to be an additional agent as a manager who actually has to approve deferment of payment of sales. Do we see that in this UML diagram? Do we see an additional association between these or even a conceptual structure? No. This one's a little bit too specific to be true. So D is out, which means E is not our answer because A is our answer. All right. Now some more diagramming because I know you guys love it. By the way, this is going to be going all the way up to the first exam, and then we won't be doing diagramming after the first exam. You can express your disappointment to me in an email after we don't do any more diagramming after this. I know it's going to be one of those things that's hard to let go. All right, so let's go ahead and let's talk through this. First is the BPM and diagram. So BPM for a fast food restaurant. All right, let's just talk about this because what do we have to know for the BPM diagrams? We have to know what the activities are. So what are the activities in a fast food restaurant? What happens? You go up to the counter, you say, all right, I would like to order whatever. So you go up to Taco Bell, says, I'd like to order my Mexican pizza. So the first activity is they take your order, right? What do they usually do after they take your order? They say that'll be $5.69 or whatever that amount is with tax. So they take your cash, then they deliver, they assemble your order, they put the order together, say, okay, here's all the ingredients for Mexican pizza, put it together just like you like it, and then they deliver it. So 4 basic activities. They can say there's the order, there's the cash payment, there's the assembly, and there's the delivery. Is everybody comfortable with that? Everybody have similar activities in their process. If you may not have that exact sequence, or that exact series or exact nomenclature, but you should have had something very close to that, because I'm assuming everybody in this room has eaten at a fast food restaurant before. If you haven't, God bless you. All right, it's just a good habit not to get into. I grew up as a McDonald's kid, and now I can't get rid of fast food restaurants in my life. So yeah. So again, fast food restaurant, pretty straightforward. So we can actually probably say the diagram looks something like this. By the way, the question came up, how do I create the diagrams? So there's a few different ways that you can create diagrams if you don't want to do this by hand. I do think that doing it by hand is actually an acceptable way, simply because you're going to have to do it by hand whenever I give you the exams. But if you're curious about creating these electronically, there's a few different ways to do it. My way is pretty much cheating. I actually copy and paste other UML diagrams, and then I take out the words, and then I just post in the words that I need, and then change the multiplicities and to the directions if I need to. So you can actually create these in Excel. The only reason I don't do that is because it takes so much longer to do them in Excel than it does to do just copy and paste them over. Whichever method you choose is fine. You can actually use Visio if you know how to use Visio. Visio is actually a much more powerful tool, but again, it does take a little bit longer to do that. Anyway, so traditional restaurant. Traditional restaurant's a little bit different from a fast food restaurant because you still go in and you sit down at a table, right? And they take your order. Do they take your cash immediately at the traditional restaurant? No. The next step is they assemble your order. So, okay, I'd like to, so you go into what Maxwell's would be a, no. And Maxwell's, yeah, Maxwell's would be a good one like that. So you go to Maxwell's, say I like the Baltimore blue cheeseburger. Is that still on the menu? I haven't been to Maxwell's. And so go to the blue cheeseburger. So you order that and then they deliver it to your table. And then in the meal, you said that was a delicious burger. Not the best cheeseburger I've ever had, but still very good. Okay. And you pay for the order. So it's change in sequence in the steps. Can we agree to that? So our UML diagram would look very similar, but instead we have to take customer order, assemble the customer order, serve the customer, and collect payment, which has the exact same activities, just in a different sequence. All right. So finally, the question is the BPM diagram. What happens if we actually have to create a reservation? So you have these reservations that are going to be associated with your traditional restaurant. You say, I'd like to have a reservation for 7 o'clock and you come in at whatever you want. So we actually have a diagram that's going to build off this traditional restaurant. Can we actually use this as a base for actually how we set up a reservation? Yes. All we have to do is actually add an activity and a condition point. So we can actually say something occurs right before the arrival, the customer arrival. They say actually set up, customer arrives, check reservation, the time of reservation, if that's actually correct, and they can seat the customer then. They're early, they have to wait. We can actually have steps before this. We actually say a reservation process before the customer arrival, which means this would not be the exception point, but this is pretty straightforward and simplistic. It's just this diagram here, where we include an activity before the take customer order. That's all there is to it. That's all there really is to this process. Again, this is similar to what I would ask you on the exam is to create something like this. It's not particularly difficult, and there is some room for flexibility on here. If you came up with something that was close to this, that's probably good enough for full credit. If your BPM and diagram was not anywhere in the ballpark, you might want to take a picture of this because this is real, or you can watch the video because it's all being recorded. Whichever the case is, you might want to make sure that you know what the differences are. All right, next question is about the UML diagrams. All right, so before we create the UML diagrams, let's go ahead and talk about this. So what is the key to creating a UML diagram? What do you need to define? Need to define the classes. What are the classes? What are the 3 classes that we're concerned about? Resources, events, and agents. All right. So let's define those. Let's go ahead and say, what are the resources, events, and agents? So the events are pretty easy in a restaurant reservation. You've got the actual sales transaction itself, and we agree to that. And then we've actually got the cash receipt because you pay for that. So those are 2 events that occur. Agents are also really easy. Who are the 2 agents in a restaurant transaction? The employees and the customers. So we're pretty straightforward. So what's pretty tricky is the resources. So what do we have as resources? So the food, is that a resource? So the items on the menu, the food, and then what's the other resource? The cash, because we've got to pay for the meal. Okay, can't extend on credit. Now, there's actually a 3rd event that we could talk about, depending on what we're referring to. If we're talking about traditional restaurant without a reservation, we have all of our items listed. We're talking about a traditional restaurant with a reservation. Can we say a reservation is also an event? Yes, we can list that out. Now, that's a little bit more dicey, and we'll talk about that why in just a second. But for the most part, let's go ahead and talk about what our UML diagram looks like for our fast food or traditional restaurant. Now, you'll notice that the UML diagram does not change because all of these items are exactly the same, depending on what are for these 2 associations. We don't actually change any of these resources, events, or agents. Again, the activities, the sequence of activities is different, but the actual classes themselves are the same. Now, I'm not going to go through the multiplicities because they're relatively self-explanatory, but again, you should be able to by now to interpret what's happening here. And just so you know, just as a reiteration, if I ask you to replicate this on exam, it would be part of this, or you'd actually have to fill in the blanks. You'd have to actually tell me what the multiplicities are, something like this. I actually have you create these for the homework assignments because you've got more time than 50 minutes on the exam, but I don't want you panicking saying, Dr. Barnes, I was so lost on this, I don't think I could replicate this in exam. I won't ask you to replicate the whole thing. Before we finish, though, we've got one more question to answer. So we've got a traditional restaurant or a fast food restaurant listed here. But we've got a 3rd type of restaurant, the traditional restaurant with a reservation. What did we define reservation as? Which category? We've got our resources, events, and agents. Where would that fall? So it's an event, so it probably falls in this column right here. Can we agree to that? Could we make an argument that it's a conceptual structure? There's a legitimate argument for that as well, because you could say that even though this qualifies as an event external to this, you could also make an argument that this is just an association between employees and customers. So if you were to create a reservation, you could create it in this column right here, or you could create it as a conceptual structure over here associated between employees and customers. The reason I mention this is I'm about to show you what the diagram looks like, and it is far more complex than what I would ask you to replicate on exam, but I think it's worthwhile to explore. So what items is our reservation going to affect? Who's going to be involved in this? Are we going to have employees involved in a reservation? Yes, they were the ones who have to take the reservation. Are we going to have customers involved in a reservation? Yep. Okay. Is a reservation going to be associated with a sale? Probably. Okay. That's the whole point of people making a reservation, is because they buy stuff. What about menu items? Do we need to specify what we're ordering during a reservation? No. Cash, is cash exchange during a reservation? No. So cash receipts probably not also associated. So we need an event that's associated with these three items. And that's in fact what the diagram looks like. Oops. Why that went to the top. Right there. Now, this is an interesting point, because this is one simple class that was added to this diagram. Can we say that this diagram is far more complex than the one that we just looked at? It's substantially more complex, because we're actually adding 3 new associations, which means we have to add 6 new multiplicities. Now, imagine I start adding additional conditions. If I start talking about what does the supplier system look like? What does the menu preparation or the meal preparation process look like? What do we do in the kitchen? What are we doing outside of the restaurant? Starting to like marketing, things like that. What happens in those situations? You have to not only add different activities in different classes, but you also have to determine what associations exist with the existing classes as well. So again, I don't want you to be intimidated by this, but I do want to really illustrate the point that even though we're just adding one simple item, one simple class, it does change the dynamic of this particular structure pretty substantially. All right. With that, I think we're done for today. We've looked at enough diagrams. We'll start on chapter 6 on Monday. Have a good weekend.